Hey everybody, welcome to episode 53 of Stock Talk with Josh and
Nico.
Nico. How you doing today?
Fantastic.
I know it's been a couple weeks since episode 52. We've probably been a little busy.
Uh-huh. Yeah.
Big movement, big things happening in our lives, things like that. But hey, we're here.
Yeah.
But how you feeling today? Like overall, how you feeling?
Good.
Good. Okay. So to the left of you, if anyone who's not watching us and listening to us, Nico, we have a special guest on today.
Really?
So no, you let the people know who is our special guest for today.
You tell me.
No, I want you to tell me. No. You know who should really tell us who's the special guest? Special guest should tell us who the special
I should.
guest is.
Okay. Well, I'm Chuck Pullen. If you're regular to WGOB, you know me from the afternoon show and the morning shows and stuff like that. I've been around a while. We talk about stuff. Always try to keep it interesting.
Awesome.
Bring a new perspective to the table.
Yeah, friend of the show, friend of WGOB. I guess the IT guy of WGOB too.
Well, I don't know. Yeah, I'm the video guy, the IT guy. I'm just the guy that Jim calls when something's not working. So. But yeah, so that's kind of how I got my start. Is Jim would call me in, and so I met Jim, and we started talking about having to do how he should be doing video and stuff like that, and it just sort of came a thing. And we started talking. He's like, "Why aren't you doing radio?" I said, "Well, nobody ever asked me, and now people ask me." So you know,
So, what was your background before you started coming here at WGOB? Doing something here with us.
I've worked in television for a long time. So I work in television engineering. I'm sort of a serial entrepreneur. I've got a couple businesses. I've been in business since I was a teenager. I've been trading since I was a teenager. I was very fortunate. I had a grandmother. Literally, people ask me, how you into trading? I said, I've been trading since I was 10 years old. My grandmother taught me how to trade, taught me about the market. I had two grandparents that were it was very important to them to teach their grandkids about the financials. So there's all these things that I just talk about. How do people not know these things? Like, well, because their grandparents, their parents, school, nobody ever taught them, Yeah. All these things that we should know about how debt works, how interest works, all these things, and nobody's ever taught them. So that's kind of been one of the things I like to do is come on the radio and talk about things like that.
How did you start investing when you were 10?
My grandmother made me do it. So,
really?
No, she actually, my grandparents, like I said, they were very much, they considered finance is very important. So when we were 10 years old, they literally said, okay, pick some stocks. And I picked like Walmart, Coca-Cola, like pick things I'm like, I've heard of Walmart, I've heard of Coca-Cola, whatever it was. And then she started explaining how the stock market worked. And she basically, my grandmother became the market. And then we would all invest and then kind of play against each other and stuff like that. So, I mean, at the very least, it's, again, this idea that kids can, you could be teaching this in school, like elementary school. Like kids can learn how the market works.
Yeah.
And it's sort of one of those things where, so by the time I was 18 and legally allowed to trade, I was right at the kind of the beginning of being able to do kind of like your own online trading and stuff like that, where it's like, okay, I got some money, I got the internet, I got whatever it was, like AOL, whatever it was at the time. It was like, I got all the things I need, and I just started trading,
Okay.
And so that was kind of the thing. It's like, I always talk about with young people. I said, that's one of the best things you can do. I know, like the other day, you guys posted about like the rule of 72, for instance,
Yeah.
like one of the best things that you could teach. I always tell people, I say, like when you're going to like a graduation party, when a kid's graduating high school, the best thing you can do is sit them down and say, put money away now. Even if it's just a little bit of money, even if it's $50. I got all these guys here. Preach to all these guys, these young guys at the radio station. Just put $50 away.
Yeah.
Because it will snowball. And it's like, that's the thing. If you can grab somebody when they're 18 years old, 19 years old, tell them when you can afford to put half your paycheck into a Roth or a mutual fund or something, and just even the idea of like just put that money away. Everybody's always talking about, well, there's this generation has no money for house payments. It's like, well, if you start putting money away when you're 18 into a Roth, you'd have a lot of money. If you keep investing religiously into it, you'd have money for a down payment for a house. Stuff like that. And so that's sort of the thing is that, a lot of times in our society, we've created this kind of idea where a lot of people they turn 18, they get in a ton of debt. You get student loan payments, whatever. We just sort of, that's how the society works now. It's just you turn 18, you're in debt. Here's your credit cards, here's your student loans, here's your car payment. And then they spend their whole life, they're always in debt. And that's sort of the idea. It's like the best thing we can do for young people is get them started off on the right foot. Where it's like, don't just turn 18 and get in a bunch of debt. Because you'll be in debt forever.
Or I've had the idea of what if, like, there was whether it's the parent who did it for the kid or the government or somebody did it, where when somebody was born, they gave them $10,000 in an index fund and then let that grow. And then when they were 18, they can have access to it.
Right. Well, when we used to do that with bonds, like I remember even like now, I started finding, when I started going through my parents' stuff, like I found bonds from when I was a baby. Like that's what people used to do. They used to they'd buy you a $500 bond, $1,000 bond. And then 20 years later, whatever it was, it matured and you'd roll it over. Same ideas. Like that used to be the way it was. You get your first communion. Everybody, instead of giving you a bunch of money that you'd waste, they give you bonds. You couldn't do anything with it. Right.
Yeah.
So that was kind of the thing, is like, we used to do that a lot.
I used to get that when I was like probably 10 years ago or so.
And you're like, what do I do with it? Like, well, nothing.
Yeah.
You just put it somewhere and don't lose it.
Yeah.
It
right?
wasn't very exciting for me at the time.
Yeah, it's not very exciting. But I mean, that's the whole thing, is like, investing isn't sexy. That's the whole thing, is like, there's no excitement to it. It's not like going to the casino. You know what I mean?
Yeah.
It's only exciting when you make fast money or when you make a lot of money in a short period of time.
And there's nothing wrong with that. Trust me, I've made some fast money. I've made some big money in the market. I've lost some big money in the market. But I mean, as fun as that is, at the end of the day, it's like you look at
the richest guys.
The guys that, dollar cost averaging, all that kind of stuff. So, that's sort of my thing, is I've dabbled in all sorts of things in the market. I play options and all that kind of stuff. So it's like one of those things that's kind of the funny thing that I find a lot of people is they get money somehow, whether they inherit it or something happens, and then they throw it in the market and they lose it right away. I've met more people that have lost all their money in the market. Well, it's like, well, how does this keep happening to people? Like, well, somebody's got to be making money in the market, right? I mean, it's Citadel and BlackRock or whoever, but I mean, that's the whole thing, is
or it's because they put that money in the market, but they're day trading with it, or they're doing options, and that's why they lose it so fast.
Right. No risk management.
Yeah.
Right.
Or they learn the wrong way. They're watching somebody on social media, and they're not watching the right people.
No, I think that's it. I mean, I think that's the whole thing, is we always talk about, like you said, the fast money. We always talk about, what are they, like the zero DTE trades and, all that kind of stuff. What do they call those? Like the apes and all that thing I was following. We started talking about that.
NFTs.
Well, no, I mean, just even like the investing in GameStop and GameStop and the meme stuff and all that stuff, where it was just like, like it was treated, they called it a casino, is treated really recklessly.
Yeah.
It's like, that's fine. Take 10% of your money and have fun with it. Do zero DTEs, whatever. But it's like, you gotta just put some money.
Because to make 5 or 10% in 1 year isn't always the most exciting thing.
Right.
But if you can get yourself to look at it in a long-term view, then if you wait a couple years, it starts growing. Like how you said, it snowballs, and it grows into more and more. Then it becomes more exciting, because you're like, look how much I've made over these last couple of years. And the good part is that it's not as risky. Like it's very consistent. You know that the market averages 10% a year.
Well, that's the thing. It's tough when, I mean, how, I don't know if you play options very much. I can make 100% in a day. Do you know what I mean? It's like to sit here and go, oh, well, you make 5% a year. It's like, I can make 100%. I can make, you start playing with a couple day out SPY options. I can make 500% if you pick the right one. You start playing earnings calls and stuff. You could easily make 500% in a couple days. So it's like, it's hard.
You could
easily lose the 500%, the call binary events. So I mean, that's the whole thing. It's like, these people go, you see even like on Reddit and stuff, you see these guys like, oh, I took my mother's money and put it on, whatever.
They put $100,000 or their whole life savings or whatever.
Yeah. So, I mean, that's the whole thing, I think that's going back, like everything else. We've taught people that the market exists. We taught people that you can get an app on your phone now.
Yeah.
So you can make a whole bunch of money. You can lose a bunch of money just instantly. You know what I mean? And that's the whole thing, is like, if you're not taught it's funny how often I see people online, they're like, oh, so I bought options. I don't understand why it's up and why it's down. Like, they don't understand Greeks and theta and all that stuff. It's like, so I bought this option. It should be up, but it's down. It's like, well, what's your expiration? And
yeah, that's the one thing with the stock market too. Like I think the past couple of years, more people are just doing it. They don't know what they're buying or getting into.
Yeah, and even when I tried studying options and I thought I had understood it, when I would go to do it, it didn't turn out like that. If I made a call option,
right,
and the stock price started moving up towards that price, my option wouldn't go up in value.
Right, because you're not thinking about the Greeks. You're not thinking about. So it's kind of like one of those things. I put it this way. If you go to buy an option at the same time everybody else is buying an option, you're not going to make a whole lot of money. That's the whole trick about options, is you have to see it. You have to see. That's why you have to look at moving averages. You have to look at. You have to really understand what you're looking at, because that's the whole trick of options is you got to get in before everybody else.
Yeah.
I mean, it's just kind of like, I don't know if you've ever hit any of those stocks. Like I don't know if you ever played the pharmaceuticals. I've had pharmaceuticals double on me overnight.
Mm-hmm.
And it's like, you're sitting here, there's guys that play, the FDA stuff, they're looking at earnings or whatever. They're looking at they're looking at something to make that fast money.
Mm-hmm.
And that's the thing. It's like, yeah, you're going to make it once in a while. You're also going to lose it, more often than not.
Then the other thing that happened to me was during the AMC, when AMC popped up, all that, I bought, I don't know if it was call options or put options. It was one. I was betting on it going up or down big. And it was I hit it, and it was up probably 5,000% or something crazy in a day. And when I went to sell it, I couldn't sell it. Like, I don't know if there wasn't any volume or what was happening, but I couldn't. It would not let me place the order for the option, so I never got any of that money.
Well, the other thing that ends up happening, especially if you have an account that's less than 25,000 and you have to deal with pattern day trader stuff. Mm-hmm. I mean, and that's one of the things that gets really tricky is that. Not a lot of people have 25,000 in cash. Or I'm like, yeah, you can be a day trader. You need 25 grand, in an account.
Why do you need 25?
It's pattern day trader. So that's the whole thing about you need to be able. So like if you want to do with dealing with settlement periods and stuff like that. If I want to just like buy and sell, like basically day trade, you need 25,000. That's an SEC rule.
Oh,
so I mean that's the whole thing.
I didn't know that.
Yeah. So I mean that's the whole thing about settlement periods and stuff like that. So like there's a whole thing with you. Like if you have a couple $1,000, you buy something and you sell it, then they go, well, that hasn't settled yet. So I mean, there's a whole thing like again, barriers to entry, as we always talk about that. It's like, well, why do I need $25,000? It's my money to win or lose, And they say, well, that's not how it works. You need $25,000. So
gotcha. So I do want to go back to the saving thing that we was talking about. So what do you think is like the big problem, or a couple of things that you think why like us, like people in general, have problems with saving money?
Did you see there was I always love these headlines and statistics because they're always kind of misguided, but there was an article that came out just in the last month or so. It said Americans have hit record debt. So we talk about, there's two different things. You talk about national debt and you talk about credit card debt. Americans are now in over $1 trillion in debt. So one of the things that happens right now is, as the cost of stuff goes up, so we don't want to change our habits. So this is like, this is how much I spend on groceries. This is how many times I go out. So now all of a sudden, inflation has gone up 8%, 10%, and now you still want to have that same lifestyle, right? But your paycheck, you didn't get 8% raise.
Right, the wages don't go up.
So you want to keep that lifestyle. You want to still go out on the weekends. You want to do whatever. So now everybody's putting their money on credit cards. So that's sort of the thing is that I think there's the whole lifestyle thing of like even now you can go on vacation and you can put it on a firm or whatever. You can go on vacation today and not have to make a payment for 2 months or something. You know what I mean?
Yeah.
Like instead of saving up for vacation, there used to be like at banks, you used to have like the Christmas club. Every paycheck you'd put $20 away for Christmas. You have a Christmas club account, and then you'd have a couple $100 to buy your kids Christmas presents. Now it's just put it on credit cards.
Yeah.
I mean that's the thing is that again I think that's the whole thing about the education is we have very much become. And you could blame anything. People always talk about you go on social media, all your friends are taking vacations. Like, well, I want to take a vacation,
Yeah.
And then, well, I don't have money for a vacation. Okay, well, I'll put it on a firm. You know what I mean? I'll make 4 payments on it, whatever.
I think it's a combination between prioritizing investing a fraction of your paycheck first before you spend it,
right?
And then I think it's the other half of it. I think is that wages over the last 40 years have not risen as much as the cost of things.
Right.
So people are poor, and it's harder to afford the same things you could afford 40 years ago. And even with that being said, though, you still can maybe take some of your paycheck out right when you get it and invest it before you spend it on other things.
Well, and there's another interesting thing that goes into that is even the idea of I think it was in the middle of COVID, the number of new businesses being created reached a record low. And so,
really?
So fewer and fewer people are creating new businesses.
I thought it was the other way around.
No.
I thought the first record was a number of businesses that closed, and then it was number of new businesses that opened in 2020.
No, I'm saying so the trend going all the way back to like the baby boomers, the trend has been fewer and fewer people are creating businesses. Think about like even like 50 years ago or whatever it was. You go to like downtown, everybody had their own little shop. Everybody had the meat market, the bakery, whatever. And now what is it? Just Walmart, right?
It's more corporation based.
Right.
Yeah.
So people aren't creating businesses like they used to and stuff like that. So that's sort of the thing I always talk about. Like think about everybody like everybody needs to have a side hustle, basically.
Yeah.
So the idea is everybody needs to have a side hustle. And I always one of the things I love saying is, you'll never get rich punching somebody else's clock, right?
Yeah.
So it's like it's fine to have a regular job, but you're never going to get rich having a regular job. You're never going to have. You're just kind of even when you go back to inflation and stuff like that, it's okay. Maybe you get a 2 or 3% raise every year. Inflation's over 4%. What does that mean? Every year I'm making less money.
Yeah, right.
Right? So, I mean, that's the whole thing. It's like we got to find ways to make more money. And I always tell people all the time, it's like even the idea of, like people don't understand how inflation works. I tell people all the time, I use this example of if I have $1,000 cash and I put it under my bed, when I pull it back out, that $1,000 is now worth $994.
Yeah.
Right? And so every year I just have cash laying around, not doing anything. I'm losing money.
Mm-hmm.
So I mean, that's the whole thing. It's like you kind of get this idea of, well, I get a paycheck, whatever. It's like, well, no, every year you're making 4% less money.
Mm-hmm.
And that's the whole thing. Is like if it's funny because I'll go on a little side tangent a little bit. So if you guys know a little bit about me, I mean, my thing has always been sort of like I'm a libertarian. So I always say we got to take care of ourselves. Government's not going to take care of us, and we should have limited government. We shouldn't be waiting for government handouts on things. We shouldn't be waiting for government to take care of us. All that kind of stuff. Mm-hmm. So that's kind of always my opinion. Is I think that's one of the problems we've run into is we've created generations of people that just sort of like, oh, well, yeah, I got Social Security. Like for us, it's like I always tell people, so think about this. You could very well spend your whole life putting money in Social Security and they're like, sorry, there's no, you know what I mean? Like, what do you do? And that's not right. Or even the idea of if you ever look at how much like the average person that's working, imagine if you could opt out of Social Security and put that in your own investment. Mm-hmm. You'd have millions of dollars and retire. Mm-hmm. But if you're lucky, you live, you get to be 67, you retire, whatever. Maybe you get $1,000 every month, whatever it is from Social Security. You know what I mean? It's like it's not fair.
But you also have 401k,
right?
Paired with that.
Well, but I'm saying, so think about that as the average person. So now I have money taken from me for the Social Security. If I'm a responsible person, now I have to put additional money away for like a 401k, and then if I want to have a savings and stuff like that. So basically, that's the idea: is that the average person isn't budgeting. They look at their budget of, I make this much money, it's how much I have to spend. It's
exactly
not,
right.
I make $1,000, I have, I'm going to put $200 or $300 away and spend $700, right?
Yeah.
Mm-hmm. And that's the problem, is that's the way we look at things. And I mean, even like with younger people, when you're living with your parents, whatever, it's like, that's the last time, like when you're living with your parents, that's the last time you're going to have like that extra disposable income.
Right.
That's the best time to be putting it in the market.
That's why that's why every dollar I have, I try to put it in the market.
Right.
Yeah.
Or even diversify. I mean, I've been hearing all week about people going to Costco and buying gold. And
I saw that.
I
saw that.
But again, it's like a joke. It's like, okay, cool. I got like a gold bar. Cool.
Wait, is that something new though?
No. No. I mean,
or does Costco always sell?
I think they've always sold it. I think it went viral for some reason.
Oh, okay.
Yeah.
But I mean, that's the whole thing, is that people have always collected gold coins and silver coins and stuff like that.
But hasn't gold gone up like 10% or 20% in the last like decade or something?
Gold is always, I mean, well, that's the whole thing, is gold is always stable. I mean, there's a whole philosophy. I don't know if you've ever gone back and learned about like the gold standard, and you talk about the Fed from 1913, talking about Nixon took us off the gold standard, and things have honestly just gone to hell ever since Nixon took us off the gold standard.
That's kind of why they're trying to bring it back too.
Well, and that was always kind of the joke, was like, even like with JFK, it was like JFK was all about ending the Fed, and look how that ended up for him. And now, like, RFK is talking about ending the Fed and stuff like that.
Wait,
and I'm like,
okay. Can you explain how? I don't understand. How does the gold standard? How would that change things?
Okay, so imagine for every dollar. So back in the old days, like a dollar used to be like they have like silver certificates, and they have gold-backed money. So for every dollar, so here's the simplest way to understand kind of why things are all messed up. For every dollar the government created and gave, there was gold. In theory, there was gold to back it. Fort Knox had, so for every dollar that this Fed printed, there was gold to back it. So we had gold, we had silver certificates, gold-backed currency. Okay, and I think it was like 71 or whenever Nixon took us off the gold standard. So now it was, you can just print money, and if you start looking at quantitative easing and you look at, that's how we ended up, we're now $33 trillion in debt, and there's no gold. I mean, the joke is like Fort Knox is empty. Maybe it is, maybe it isn't. But so that's the whole idea, is that, essentially you have currency that is not backed by anything, right? So the Fed can print whatever it wants. And that's kind of what we're talking about now.
But why does it need to be backed? That's what I don't understand.
Well, what assurance is, like, if I right now grabbed a piece of paper and said, here's a Chuck buck, What's it backed? Well, you know what I mean? Like, what's it backed by, right?
Yeah.
So if I give you, I'm like, so like the other day I was on the radio here and I brought in a $10 trillion Zimbabwe note, okay? Because Zimbabwe back in 2008 through like 2014 or something, they had hyperinflation.
Yeah.
So literally you got to the point where they were printing, they just kept printing more and more money. And literally people had $100 trillion bills. So I had a $10 trillion bill with me. Guess how much it was worth in American currency?
How much?
4 cents.
4 cents.
10 trillion. So imagine people would they'd have a wheelbarrow. And if you go back to and again, this is all interesting stuff that you guys should study. Like Weimar Germany is kind of the first example of hyperinflation. Venezuela went through it. Zimbabwe went through it. People literally had barrels, wheelbarrows of cash and just to buy a loaf of bread.
I think even in the last year, I forgot what country, I think it was Venezuela or Brazil or something, their inflation was 100% year over year.
Yeah. No, Zimbabwe's in whatever, I think, I try to remember it was 2008 or 14. It was like 1,000,000%. I mean, 1,000,000. So literally every day your currency.
So how'd they fix it?
They didn't. That's the problem.
It's still
and so that's why those of us are paying attention. We're like, you don't fix when you get that much into debt. When you don't fix that. So Zimbabwe literally reset. So you hear about like the Great Reset and stuff. That was literally what Zimbabwe did. They said, okay, on this date, kind of like with the euros, like, hey, on this date, this currency is worthless. Like, well, that's cool. What am I going to do with all this trillions of dollars I have? Like, that's worthless. They literally created a new currency. They reset and they created a new currency. And then guess what? Hyperinflation. They're like, well, now what? They're like, now what do we do? So I mean,
so does the gold standard prevent inflation?
Well, the gold standard doesn't prevent. I would say that the gold standard doesn't prevent inflation. Well, I guess it would, but technically it doesn't. The whole point of the Fed was to prevent inflation, and they failed miserably. Like the dollar has lost 94% of its value since we created the Fed. But so I mean, the idea is inflation is caused by what? It's caused by spending. So right now you've got a federal government that's $33 trillion in debt. Our budgets are like, they're literally saying, well, we're $2 trillion short, $3 trillion short. So basically every president going back your entire life has spent more money than the last. Mm-hmm. It just keeps growing. And now, I was trying to remember some of the figures I saw the other day, like just the interest alone on those trillions of dollars is like billions of dollars a day.
Yeah.
And so that's the whole thing is like, so when you talk about preventing inflation, it would prevent inflation because you can't print money you don't have. Like, well, do you have the gold to back it? Well, no, I can't print money. So that's the whole idea of the gold standard.
The gold is worth a certain dollar amount.
So imagine the federal government had, $1 trillion in gold. It can create $1 trillion.
Oh, that's it?
So imagine Fort Knox had $1 trillion in gold. You go, okay, we can create $1 trillion in notes backed by that gold. So at any one time, so back in the old days, you literally can go in and go, I've got a gold certificate, I've got a silver certificate. I would like to trade it in for that value of gold or silver, however it worked out.
Okay.
So you literally could go in and go, I would like, so like some of the Chuck Bucks. Like, okay, I'm going to say my Chuck Bucks are backed by gold bars from Costco at my house. So I give you a Chuck Buck and you come back and go, hi, Chuck, I'd like my gold back. It's like, okay, cool. But now you have to trust that I have it, right? And that's the whole thing is that when you get off the gold standard. So again, this goes back to like Bernie Madoff and Ponzi schemes.
Yeah.
Is literally the idea of you give a guy money, he goes, oh, I'll give you 10%. The only way he makes 10% is other people keep giving him money.
Getting another person's
right.
money. Yeah.
That's where a pyramid scheme comes from.
I watched a documentary on Netflix. It was so good.
So I mean, so that's kind of like, so that's always our joke is like, if anybody else did what the federal government did, they'd be in jail for life for a Ponzi scheme because it's basically Social Security is like a Ponzi scheme. The currency, I mean, everything is basically like a Ponzi scheme. And again, I know this is depressing. It's crazy to think about, but I mean, that's just, again, and I always tell people if you don't believe it, look it up, do your own research. And if you guys don't agree with me, look it up yourself. We can have a discussion about it because I mean, that's kind of the way I look at it is like, our money is backed by nothing. Our money is backed by fighter jets and, nuclear bombs.
And our imagination. Yeah.
Okay. So that would mean that, so if the United States, like they would have to get more gold in order to print more money.
Right.
That's how
gold
that
backed.
works?
Right.
Wow.
And then we went off the gold standard. So it's like, okay, we can just print money now. And guess what's happened since we went off the gold standard? That's where the $33 trillion
that would
in
be
debt came
unlimited
from.
inflation then.
Right. Yeah, but that's the whole thing. Is so
they only did that though because they didn't have enough money to pay back people.
Well, the idea was, hey, we need more. We want to spend more money. We don't have enough gold. Like, okay, we'll just go off the gold standard. I mean, that was kind of the idea. Is that not crazy?
That is crazy.
And again, they're not teaching you this in high school. They're not teaching you about the gold standard. But I mean, all this stuff is there,
Yeah, they kind of gloss over. They just talk about
gloss over
the San Francisco 49ers and no immigrants mining gold is gold. That's it.
Right. So I mean, that's the whole thing is that, and it's kind of the same joke when people go, well, Bitcoin's backed by nothing. I'm like, well, your dollar's backed by nothing too. I mean,
I see what you're saying.
So that's
but the difference is Bitcoin is a fixed amount.
Well, there's right, and that's why I'm joking. That's why I said you're right. In theory, Bitcoin is more valuable than the American dollar because you're only going to have 31.
It's 21 million.
Is it 21 million Bitcoins?
Yeah.
The federal government just money printer goes burr. You know what I mean? I mean that's like during COVID, they just kept printing trillions of dollars, and that's the whole thing. It's like, oh, we need money. It's like, okay, just print more. That's what quantitative easing was. If you read about
how that's like fake then. That's like
hey, the light bulb's going off.
It's like fake.
There you go. It's fake money.
It's fake money.
Yes.
Because if you owe someone $1 trillion,
right?
But then you print $1 trillion
right.
to give it to them, then now everything's inflated.
Right.
So that $1 trillion is still worth zero.
It's going. So I mean, think about
crazy.
We need to get like a big printer and then pay off all
printer.
our debts.
I know, right?
Yeah, just print more money.
Yeah,
Well, that's what I said. Well, why do I have taxes? Just print more money. Like, why am I paying taxes?
Yeah, exactly.
So think about this, like even during COVID. So look at this. So everybody got stimulus checks, right? And so the funny thing that was happening during COVID was people were putting those stimulus checks into the market. Okay, so imagine the government created money. Okay, so the government printed money, sent you a check, you put it into the market, and then you made money.
But goods cost more.
So
really, you're right where you started.
You're right where you started, but the government created trillions of dollars in new debt.
Yeah.
Huh.
Yeah. Yeah. So I mean, that's the whole thing. Is
and every time they do that, it makes unless our wages go up an equal amount, then we're struggling more and more every time they do that.
That's why we ended up with 8 and 12% inflation, whatever it was. That's why the CPI. I mean, look at they call it the breadbasket. They look at the cost of goods. You look at like what it costs, to buy these certain goods. Again, CPI, all those numbers. That's why when you watch the markets, that's why those things are so important because the investors know, the traders know, like when CPI is high, but it's been weird though. Even like now, the market's been like upside down. Like bad news is good and good news is bad, whatever. But it's
been like generally good up until this past week. I feel.
Yeah. Well, no, I mean just in general, just like for the last, basically since COVID.
About a year or two. Yeah.
Yeah. So the last couple of years, but even the idea of that, where you look at it and go, well, we think CPI is going to be 6%. It comes in 8%. That means people are going to have less money to spend because they still got to buy food, right? I mean, that's the whole thing.
So they battle that when they print that money. They battle that with interest rates.
So that's why when you hear the Fed meetings and stuff like that, we talk about the Fed meetings when they do with interest rates. So when you have, going back to, there were times that we had like 0%, like zero rates, 0.2, like nothing. So literally imagine you can go in and it gets complicated because you're not getting 0% interest. The bank was, and they're still charging you 4%, whatever. But I mean, so basically imagine back when you had almost 0% interest, the banks were just getting money. The banks said, "Oh, we need money." There's a whole thing about the repro markets and overnight. And again, banks, Chase Bank doesn't have billions of dollars in cash. It's like a whole thing with the Fed, and it's really like ledger balances. So they would go in and go, "Well, we want more money." And I mean, imagine a bank just goes, "Hey, Fed, I want more money." It's like, "Okay, cool." Just types in a button. You got more money? Cool. At 0.25% interest. So that's the whole thing is that when they raise rates, that's the whole thing that's been happening in the last few months is the idea of raising rates. So when money gets more expensive, people are going to borrow less money, right? So kind of the idea when there's free money, of course you're going to borrow money. I can put it in the stock market.
Yeah.
I can get 0% interest and go buy lottery tickets, whatever. You know what I mean? Like what? Go do whatever. Invest in your business, do whatever. But as money gets more expensive, then people are going to use less of it. It's going to cool the market.
But there's also an incentive for you to save it because you're going to earn interest.
Right. So now we've got bonds and you've got 5% yields and stuff like that. So yeah, you're right. So I mean that's the whole thing. And there's a whole thing. And again, I don't get into all this stuff, but I've been hearing a lot these few weeks about bond yield curves and upside down and like all these indicators. Like the bond yields are upside down and stuff like that. It's like that doesn't sound good.
They've said that like 2 or 3 times since 2019. They've said that like 2 or 3 times.
Yeah. So I mean stuff like that where it's like. But so again, going back to the bond yield stuff, it's like, okay, I'm going to give the government $1,000. I'm going to give them a bond. Where does that 5% come from that they're going to give me back? Right. So, I mean, I'm going to buy a bond and they're going to give me that money back plus interest.
Well, it's because you're always borrowing from the future.
Right.
Right.
So that's sort of the thing is that like right now I always joke that like when my kids are born, when my daughter was born, her first piece of mail was her Social Security card. Why was that? Because now they can create debt on her Social Security number. So every child is born. Like right now I want to say we're at like a couple hundred, like imagine it's like $300,000 per person. So our debt is in the hundreds of thousands of dollars per person. Like, well, who do we owe that to? Who's getting that money? You know what I mean? Like that's the kind of thing is like for every American, there's hundreds of thousands of dollars in debt. And so that's sort of the thing is like, how are we ever even going to conceive of paying that back? Because I mean, think about your credit cards. Put it in this perspective. We were talking about credit card debt earlier. The more money you borrow and you put on credit cards, what happens? Every month you owe what? More interest, right? At a certain point, and that's what we're dealing with now. When people talk about the government budget, at some point, our debt payments, your credit card payment is going to be more than even like our military spending. And people always talk about how crazy our military spending is. Our debt payments are more than I think they're already at that point now.
Yeah, I can see.
So just servicing the debt is your most expensive. So just imagine your credit card payments are your most expensive payment as an individual. You're kind of stuck, right? I mean, because you got to put more stuff
for
on credit
cards. For a lot of
people,
it is that,
Well, no, but I'm saying, I mean, imagine just even servicing your credit cards is more than like your house payment, your car payment stuff. You know what I mean? Because you put so much money on credit cards. Yeah. But in this case, the American government. So we're recording this. We are on government shutdown eve. Right, so October 1st, we're supposed to have the government shutdown, and we were talking earlier. It looks like it's going to get extended. We kicked the can again for 45 days, but I mean that's what the government shutdown is. The government shutdown is basically saying, "Hey, are we going to get another credit card, or should we cut spending?" Like, now let's get another credit card. How much? Yeah, whatever. I mean, that's basically
even though there's a debt problem.
Well, that's what I'm saying is that's literally what the government shutdown is right now. The government shutdown is the end of the fiscal cycle and basically saying we're out of money. What do we do? Oh. So October 1st is we're out of money. There's no money. What do we do? Are they going to shut down the government indefinitely until we pay back the $33 trillion? No, of course not. They're going to get another credit card. And that's basically what Congress and the House is arguing right now. It's like, how big should our new credit card be? Not should we cut spending. It should. How much is our credit card going to be? How much more debt are we going to create?
Okay. Do you think, real quick, do you think if interest rates were kept at like what they are now, like let's say 5% or something, where you would earn 5%?
Yeah.
That would permanently curb too much borrowing, and it would incentivize saving. Then.
Well, but and that's where it gets complicated, though. Is like, okay, I mean, there's the whole idea about I run a business, I want to expand my business, and hire people or whatever. I'm more likely. The whole idea is, the hope is with cheap interest rates, people aren't using that money for vacations.
Yeah.
The whole point is we're hoping that businesses are getting loans. We're going to expand our business, which means we're going to create more GDP. We're going to hire people, which is good. We're going to create more product. So that's the whole idea, is that when you're there, when they're talking about this is not for us. This is like, again, going back to the banks and these companies that are needing millions of dollar loans to do whatever. So, I mean, their hope is when interest rates are low, businesses are going to borrow money and expand and make more widgets.
Oh, yeah.
Right? So, I mean, that's kind of the idea, is that the more money that goes into the economy, the more money that we have, the more money we're going to spend on things.
The GDP should go up.
Right. But I mean, imagine right now, our debt is something like 130% of GDP or something like that.
Yeah, right.
That's not good. Once you hit 100% of GDP, you're kind of.
But now wait, with GDP going up, that should help the country though. That's going to bring in more money for the country, right?
Right.
But so that's good. That makes that they can use that to pay back debt.
Right. But you're borrowing that money, and then you're paying interest on that money.
But with any loan,
right,
as long as you're using that for productivity and the return is higher than the interest.
So as long as that goes back to the whole point of things work completely different in government as they do in the private sector. So you're right. In the private sector, the goal would be we want to create more business. We don't want China and Mexico or whoever.
Yeah.
We want to produce more here, right? Mm-hmm. I mean, that's where you have wealth creation and all this stuff that happens. Mm-hmm. The more money, the more stuff we buy from China and Mexico, the worse off we are, right? Yeah. So that makes sense. It's like we just keep giving money to China for stuff and not making it here.
That's why they say globalization's bad.
Well, it's not bad. It's I'll put it this way. everything in life is a balance. And one of the things that happens, whether you're talking about politics or you're talking about governments, everything's out of balance. And that's the whole thing, is that people hate balance, because balance is you and I are equal. We're sharing equally, right? And it's always somebody wants something more. Somebody wants more. Somebody takes more than the other. And you don't have balance. And that sort of thing is everything's out of balance.
Yeah.
And it's like, and honestly, everybody in government's like too stubborn to get us back into balance.
Okay. So
What a
before we
shame.
get to the list real quick, I want to ask you a question. Do you think it's any like possible way that we kind of move on from the U.S. dollar being the main currency here at all?
I mean, well, that's what, if you look at BRICS and all that stuff, I mean, people, so, going back decades, basically when we emerged from World War II, we became sort of the dominant country, and everybody started using American dollars for petro. Like you go to other countries, even like, like when we were at war in Iraq and Afghanistan, we would literally, no joke, send pallets of money to Iraq and Afghanistan, and they would use that for currency, right? Because it's like, it's a dollar, it's American dollar, it's American $20 bill. That's the standard, right? So we were the standard of money. And as our dollar becomes worthless, and as our country gets, basically as we lose our position to like China, they're going to go, well, why are we using American dollars for oil? Why are we using American dollars for this and that? And that sort of the thing is that we talked about how I look at the American dollar as basically, just worthless, just like, because I know my history about Venezuela and Weimar and Venezuela,
Aren't
Zimbabwe.
Other countries are also having inflation problems.
Yes,
though,
they are.
right? So unless like the Chinese dollar or some other country's dollar was so much stronger than ours, then people wouldn't switch.
Well, that's the question, though, is that it basically becomes a race of, like, again, I have the $10 trillion Zimbabwe bill that's worth 4 cents.
Yeah.
Do I want to be the guy that's stuck with American currency if I'm worried that someday the Americans are going to print $10 trillion bills and they're going to be worth 4 cents in my country, right?
That would be crazy.
Right? So, I mean, that's the whole thing.
But that's really extreme, though.
Yeah, I'm sure the people in Zimbabwe and Venezuela and Weimar Germany thought,
no, but,
right.
Those countries are nowhere close to the same level that the United States is on, though.
Yeah.
So
well, I mean, so do you know why? Like, so look at this. Like, you guys have heard like the Roman Empire and stuff. Do you know where the Roman Empire collapsed?
Why?
Do you know why? Just take a guess.
I feel like I just watched a documentary on this, but I forgot.
It's kind of funny because a lot of people make comparisons between us and the Roman Empire.
Right. They weren't. I mean, they basically, you know what they did? They printed a whole bunch of money. Their government got really big. They basically had more people that weren't. They had more people that weren't working. They had more people. They had more tax collectors than people to collect taxes from.
Yeah.
They just grew so big and fat that they collapsed on themselves. I mean, that's the whole thing. Is like when you look at history, I always say history is cyclical. You can look at the Roman Empire. You can look at Chinese dynasties. This always ends the same way. This always ends the same way unless we do something radically different. This is what happens.
But how long do those things last, though? How long did the Roman Empire last?
Well, you know what they say? The average length of society is 250 years.
Really?
How old are we? 260-something years old.
Really? Oh, God. It's almost our time.
Right. But unless we do something radically different. And we're not going to, because everybody in Congress is 100 years old.
Yeah.
So, I mean, what are we going to do different? What are we going to fix?
We're doomed.
Maybe.
Or we can educate ourselves, and that's the whole thing, is that I think, to me, I don't think government's going to bail us out, because I've seen how government tries to fix things. I think the best thing we can do is educate young people, educate people to be self-sufficient in the markets and be financially independent.
Okay, all other countries that are anywhere even near our size,
yeah,
they're all way older than us, right?
Yeah. Well, I mean, in theory, I mean, there's
China,
a lot of
Russia, India.
Yeah. But I mean, look at some of the countries. Look at what like Germany's been through. Look at what England. I mean, look at what those happened during. They were constantly at war. Like Europe's just constantly at war up until like World War II, right? I mean, that's the whole thing. Is that just like us? I mean, there was a point when I was alive during 9/11 and all that stuff. There was a point where we were sending people to Afghanistan and Iraq that weren't even alive when the towers fell. I mean, there was kids that were 18 years old and we were still at war 20 years later. I mean, that's the whole thing is like we're constantly at war. Even now, it's like, okay, we're out of Iraq and Afghanistan. Everything's cool. It's like, oh, never mind. Now we're going to send stuff to Ukraine, right? I mean, that's the thing is like you have to look at that and go, why are we like constantly in this war cycle? Why is our biggest line item is, fighter jets and aircraft carriers? Like, what are we, like, is that really how a country succeeds, is to spend all of its money on nuclear bombs and stuff, right? Maybe that's job security. I don't know. Maybe that's that's what's different about us, is we can bomb our way out of this, right? I mean, I don't know.
Might have to do that. But yeah, let's get to the list though. Let's get to the list. I'm very excited about this first one. I didn't know about this, and this store, like growing up, was like my favorite as a kid.
Yeah, I know, right?
So it says Toys R Us is making a comeback. This comeback is going to bring 24 new locations. Yeah. So how are you feeling about that?
That's good, I guess. Hope they succeed. I forgot what the parent company is called, but they have a parent company that's doing this.
Yeah, it's just like, it is kind of weird timing too, because like how the retail landscape is.
Yeah.
Like bringing 24 new locations.
I feel like Toys R Us closed when? I feel like I was in high school or something.
I think about 10 years ago, right?
Something was that one? Yeah. That seems about right. But even going back to the idea of department stores, Toys R Us, Sears, Macy's, whatever, is they had a lot of issues. They had, you had a toy store, and then you had Walmart came in. Yep. Walmart selling toys. I mean, that's around the time, Walmart isn't really that old as opposed to like JC.
Yeah, 2004, right? 2000.
Well, I'm saying like I'm saying like, so look back. Like J.C. Penney,
they're like early 1900s,
and Montgomery Wards and all that stuff. They were hundreds of So I mean, that's what I'm saying is that Walmart is a relatively new.
When did Walmart come out?
Well, I mean,
1962.
So he created. Sam Walton created the first Walmart in 1962, but they didn't become this big like Walmart in every neighborhood till like the 80s and the 90s.
Yeah.
And that's when Toys R Us first started kind of having this. You had like a Walmart, places like that selling a lot of toys.
Well, and the other thing.
Yeah, the first Walmart came in Illinois in 1977, and the first in Indiana in 1980.
Yeah.
Wow.
So, I mean, so that's sort of the thing is that, so you had that time frame, and that was kind of like the first big store that had a big toy department, stuff like that. So it's like, why would I go to Toys R Us if we go to just stop at Walmart and get the same stuff? But that also goes back to the idea of globalization, where it's like, okay, if I go to Walmart, if I go to Toys R Us, if I go on Amazon, I'm going to see the same kind of toys, like everywhere. The same whoever, whether it's like Sesame Street or Disney or whatever, I'm going to see like the same toys everywhere, right?
Okay.
And plus, like, I don't see kids like playing with toys a lot anymore.
And that becomes a big problem. Is when
that's because we're older.
No, when you ask kids what they want, what do they want? They want like a gift card for
digital stuff.
They want digital stuff. They want games.
I feel like if you ask any like kid, most of them like under the age of like, let's say 4 to 12.
Okay.
You want a toy or an iPad? Which one do you think they're going to choose? Yeah.
Or do you want, you want a gift card for iTunes? You want a gift card
Roblox?
For Roblox. My daughter's in a Roblox. You want to, for PlayStation, whatever. I mean, that's what they want. That's all digital.
And see, here's the other thing. I remember at the time when Toys R Us.
Great movies.
Yeah. But Toys R Us, when they were going under, I think they were saying like, oh, it's because they didn't keep up with e-commerce like Amazon and Walmart did. Toys R Us did not adapt to that. So
most of those, I mean, even like going back to like the whole Amazon Blockbuster, all that. You ever heard the story about how Blockbuster could have been Netflix, and they laughed it off. Like, nobody's going to watch TV nobody's going to want to watch movies online. We're just going to keep making because you're going to come to us and rent DVDs.
You know what?
I mean,
this past week, Netflix just ended their DVD.
They ended the DVDs.
That's funny.
Blockbuster, the one last Blockbuster in Bend, Oregon, came out and said, we outlasted Netflix DVDs. Yeah. But I mean, that's sort of the idea is that all these companies just didn't adapt.
That's crazy. There's still one location.
There's still one location in Bend, Oregon. There's documentaries about it, and I'd like to go visit sometime. But
yeah, Ben Tamara went there, I think.
Yeah.
Really?
I think he did, yeah. But yeah, I mean, that's the whole thing is like if you don't keep up with e-commerce, I mean, they're like, oh, we're just a toy store. You come in and buy toys. It's like, oh.
I feel like that was pretty evident at the time that if you're not doing e-commerce, you're going to fall behind. Like that was like the general story out there. So how did they not adapt to that? I don't understand.
I mean, that's the whole thing is that going back to the idea of, like having 100-year-old people running the show.
Yeah.
Where you go up to an 80-year-old guy, like, we're going to work on e-commerce. Like, what? Why aren't people going to come into the store anymore? Yeah. You're crazy. I mean, that's the whole thing is like you have a a world run by like old dudes, right?
Yeah.
They don't get it until it's too late. So I mean, that's the whole thing. I mean, even you look at, like Jeff Bezos and stuff like that. I mean, Zuckerberg was in college when he started Facebook. All these people are just like young people that came up with ideas.
Yeah.
And then like old people just didn't get it. It's like, okay, well that's fine. And now what happened? They rule the world, right? I mean, that was the whole thing. I remember when Amazon literally was like, we just bought college books on it. I remember when that's what Amazon was. He used to like be like a used bookstore.
Like a check?
He was like an online used bookstore for like college books.
I kind of remember that. I don't know if I was.
No, you don't remember that. You were born in like 98.
Well, it would have been after that. I mean, it would have been
no, but like in
time,
like 2010.
And you know the first thing I remember about Amazon is the Fire tablets.
Yeah, well,
that's the first thing I remember.
I mean, everything revolved around
books,
books and reading and stuff like that. And then they're like, oh wait, we could do other stuff. And then now they do everything, right? So I mean, that's the whole thing. Is like Amazon. Anybody could have been Amazon, right? Walmart could have been Amazon. Toys R Us, Sears, anybody could have been Amazon, but. He just came up out of nowhere and he's like started selling his books and he just built up his business, right? I mean, that's the whole thing.
The general idea is just that he has a website where he's not the one that is holding all the product, right? There's a bunch of different sellers on there. So doesn't Walmart do that?
They do
now
that.
they're doing that.
Now they do that.
Yeah.
Now they do that, right? I mean, now, but that's the whole thing. Is like, people are all about. Sort of like people are creatures of habit. So it's like my wife, like every day an Amazon box comes. Like she doesn't even know what she orders half the time, right? Yeah. People get in this habit of just ordering Amazon, whatever. Go to the same restaurant, stuff like that. That's the whole thing. Is like once you become the household name, once Amazon is Amazon,
you win.
How do you unseat that, right?
Yeah.
I mean, that's the whole thing. Just like we still talk about like you guys probably call them copies. We call them Xerox. Like Xerox was the brand name of copiers. Everybody just called it Xerox, right?
Same thing with Kleenex.
Right. Kleenex is tissue. But everybody calls it Kleenex. It's once you're the brand, once you're the name, that's it.
No, I did region rides. When I've been giving people rides, they call me an Uber. I'm like, I'm not an Uber. Like, right. I don't work for Uber. Right. I'm like, I'm region rides.
And you can't put a value on doing that.
I know.
Just being called the Uber or being called the Instacart or whatever. Like you can't put
or the DoorDash or
right.
something.
You can't. You become part of the lexicon. Like you can't put a price on that, right?
Yeah.
So I mean, that's the whole thing. Is like even
how do you compete with that?
Right. That's what I'm saying. Is like I don't know.
I can't start a business if they're still calling me Uber.
Yeah. Well, just own it then. Be like whatever. Until you get sued. I don't know. Well, you want to run through some other stuff?
What's our next thing? Well, I put the market is shifting to more fear based, just because like the gauges are shifting to more fear. But now I feel like finally some stocks are starting to fall. The indexes and a lot of bigger companies, Apple, Amazon, stuff like that. It's hard to gauge whether or not we're overvalued or what's gonna are we gonna go down more? Or what's gonna happen?
Yeah, it's kind of weird to like kind of predict, in my opinion. But
I think a lot of it's sector based. I mean, even a few months ago, you had the banking sector issues.
Which still hasn't recovered.
Which still hasn't recovered. You go back to 2008, it was basically mortgages. Mm-hmm. So I think a lot of times, like 2008 was the mortgage sector that took everything else down. And that sort of becomes the issue. Is one of the big things that I see coming up here soon is, so imagine people need, so and again, I don't have to deal with this, but this is the way I understand it is there was a moratorium, there was a pause on student loan payments. So for the last couple of years.
That ends tomorrow too, I think.
So that ends tomorrow. So imagine, this is the big fear is, so now all of a sudden you've grown accustomed for the last couple of years to not, so your budget has excluded your student loan payment.
Wait, what? Why?
There was a moratorium because of COVID.
You didn't know that?
No.
So people didn't have student loan payments.
You got any loans?
No.
Well, apparently he doesn't because he hasn't been paying them. But so yes, so they put a pause on student loan payments during COVID, and people haven't had to pay their student loans. So imagine their budget was, okay, I've got money because I don't spend, I have extra money because I don't have to spend it on my student loan, and now starting tomorrow.
I did not know that.
So there are people that have there are people whose student loan payments are like more than their house payment or they're more than their rent.
Over
right?
100,000.
What are people going to do?
What are they going to do? They're going to stop spending money, right? Yeah. What are they going to do starting tomorrow?
They're going to stop buying Nikes.
They're not going to have any money. They're not going to have any disposable income to go out and do stuff.
Yeah. It's going to hurt all
and I don't
stocks.
know. I mean, there's millions of people who have student loans. So I don't know what's going to happen. Are people going to lose their homes? Are people going to, go back and live with their parents? They're going to lose their cars? What's going to happen?
It's going to be another topic for the next election.
Yeah. Wait till the next election. Wait and see what they say about it. But yeah, I mean imagine people that haven't had to pay this. Like say it's 20% of your budget. You haven't had to pay it in a couple of years. Now all of a sudden you got to pay it again.
I know.
So that's I mean, and so
are you gonna be okay?
I think I should be okay.
Okay, good.
But a lot of people look at that and say that's gonna cause the next bubble.
Wait, what happened to the government's gonna pay for all of it?
Oh, it turns out that was unconstitutional.
Yeah, unconstitutional.
As it turns out,
how is it unconstitutional?
Because you're basically buying votes at that point. So you can't.
Really?
Yeah. So he
kind of said, Biden said it kind of like, if you vote for me, all your student loans.
Well, no, it was even better though. It was like during the debates, it was like the Price is Right. They're like, I'll give you $1,000. Well, I'll give you $2,000.
Bernie Sanders did that.
And Bernie Sanders. I mean, that's what I'm saying is that everybody promised you. Okay, so everybody promised you free stuff, and it's unconstitutional. They're all lawyers.
But
you think they know better.
Joe Biden's in office. Why would he even say that we're going to do this if they weren't sure that it's possible?
Well, during the election, that was
hang on.
big.
You just said it. He's in office. He said it, and he's in office.
He said it while he's in office, right?
Well, no, I mean he was saying it during the debates. Everybody was promising you free stuff.
That was one of his biggest talking.
But no, he did. He did promise it more recently.
Like 6 months ago.
So he said we're going to pay off student loans, and then they said no, it's unconstitutional. So now they're doing like this graduated system where if you're a teacher you get this much, if you're this, if you went to a certain school. So it's like a whole complicated funding. Everybody's getting like a $10,000 kicker that they're taking. They're just a rate again. But again, it's all numbers since it's all held by the government. Is that imagine there's billions of dollars in student loans on the books, and every one of them gets $10,000 taken off. Nobody's paying that money. They're just line item taking $10,000 off. I mean, it's just again imaginary money. So that's $10,000.
So who doesn't get the money then? The college. They're the college.
Who loaned them the money? It's federal loans. Who loaned them the money?
Oh, you mean like that?
Yes.
Which means it's going to increase the debt for the country.
There you go. Everything that government does inherently raises the debt. And this is why people think I'm crazy for always complaining about everything from trains to bike trails and stuff. It's like, because everything this government does, think about this. Every time people say, well, it's federal money, this government has no money. It's in debt. So it's kind of like if I kept hitting you up for money and you kept putting on a credit card. Like, oh, I'm going to hit you up for some money. You're not. You don't have the money. You're putting on a credit card.
But all they could do is cut spending somewhere else or raise our taxes.
So that's the whole thing is that there are people that say, well, tax the rich. Imagine if you tax the rich all you wanted and you only raised like $1 trillion and you're still $2 trillion short. There's no amount of like taxing. You could take everybody's money and still be, have
spend more than
10%, right? It'd be like 10% of the debt.
So they need to spend less.
So that's the whole thing is like, stop letting people tell you tax the rich, because even then, like taxing the rich isn't going to fix the problem.
It would help.
No, well, what would it do though? What happens if you take money from people that have money to spend? The businesses. What happens if I take money away from people that are using that money? Again,
they say that.
What do the rich? But what do the rich do with their money? Like, what do people that have money do? They spend it. They buy stuff. They go on vacations. They buy cars. They invest it. What happens?
But they invest it, and that means their equity and their investments are just growing to more and more hundreds of millions or billions of dollars.
Okay, but But you do
a lot of times they have employees
do
too.
Do you think wealthy people, except for Warren Buffett? Wealthy people spend more money, right? We agree on that? I mean, that's the whole thing is that wealthy people spend more money. They buy more cars. They go on more vacations. They go out drinking. They go spend money on food.
I don't know about that.
You don't think?
Yes.
You don't think a wealthy person spends more money than a poor person?
Yes, but I mean, like, if you took that same amount of money they're spending and you split it up between 100 different people, those 100 people would be spending it on more.
No, but it's not going to the people. It's going towards the debt. It's going into that. Well, just think of the government as like a black hole. All you're doing is I'm taking more money from people. So it means I'm taking it out of the economy, right? So like imagine the idea of we all run businesses. I run a business. I buy something from you. I give you $1. You give him $1. You give me $1. That spurs the economy. But what if they took my $1 away? Now I wouldn't have, nobody else would have that $1.
Yeah.
So what I'm saying is that for every $1.
So the only solution is for them to spend less.
Right. And guess what nobody in Washington's talking about? Spending less. That's the problem. I'm a big fan of Rand Paul because he's like one of the only people in Washington that talks about that. He's had all kinds of plans for cutting.
Nobody else says that?
Nobody. A couple of Republicans. I mean, really no Democrats. Nobody. But again, it's for them. Think about all that money goes to Washington. There's millions of bureaucrats. They don't care if a Republican or Democrat gets elected. The people at the EPA and the IRS and the FDA, they still have a job. They get paid regardless of who gets elected, right?
So it's not about more money. it's about spending less.
Right.
Kind of like how they say with regular people. Where
Right.
Like if you give them more money, they're going to spend. They're
So,
going to spend more
right.
money.
So
it's kind of funny that the government has the same issue that a lot of us have too.
Yeah.
Like
right.
us have
But the difference
money,
is though they can just go ask for a credit card.
Right.
And get more credit
They can
cards.
print more money.
At a
We
certain
can't
point,
do that.
You can't do that. Right. You can't.
You're gonna get declined.
You can't call Visa and go give me another $100,000 on my credit card.
They're gonna look at you like you're crazy.
Right.
Man.
Plus, you don't even have a credit score. So say if you have a bad credit score, definitely can't
Who,
do
me?
anything.
But so that's
No,
an
I
interesting.
started.
But you brought up an interesting point because our credit actually, the federal government's credit actually went down a point. They went down. They were like AAA.
Oh,
now
you're
they're
right.
Like, so that's the whole thing. Is so what happens if you have bad credit? What happens? It costs you more money to borrow money, right?
Really?
Yes.
From who? Who lends the government money?
No, well, it's a bond rating. So I mean, it's you basically there's just like your credit score, a bond rating is basically a government credit score.
But they're so big. How would that negatively affect them?
The bond market is going to say, just like
I see what you're saying.
So this is not like this isn't. This is all fixed. This is all like the bond market. If you have X rating, your bond.
You're saying when the U.S. government sells their bonds, to like
it will
people.
cost more, and they will get nothing more out of it because their credit. Just like if both of like let's say my credit score is like 200 points better than yours, we both get $100 credit card. My interest rate's gonna be lower than yours.
Yeah.
You don't get more stuff. You just pay more interest. So as this government's credit rating goes down, we're going to spend the same amount of money, and it's going to cost us more to borrow.
Yeah.
Which means what? We call that the debt spiral.
Does that mean if they're issuing a $100 bond, it used to pay out 5%?
It'll still pay 100%. No, it will cost the federal government more to borrow money, which means they're borrowing the same amount of money, but it's costing them more money to borrow, which means they're paying more in interest.
Oh.
Gotcha. And so what happens? And if you're not spending less money, what happens? It's a spiral. It just keeps getting worse.
So in
and
other
worse.
words, when those interest rates are higher, it's bad for the government.
Yeah.
But it's good for us.
Well, it's good if you got the money.
It's good if we're saving and investing.
But again, that becomes a question, though. It's like, okay, you get 5% on a bond yield, but inflation's 8%.
No, not now, though.
No, but I'm saying if it was.
If
I mean,
it
that's the whole
was.
thing is like people are like, oh, I'm getting 5%. Like, yeah, but inflation's 8%. You know, you're losing money.
But inflation's only like 2% now.
Now, right?
Yeah.
For now.
Yeah.
But it was 8%. What if it goes back to 6-8%?
But
and
then
you're getting 5%.
But if we're getting higher interest, and that's costing the government more money, but we're making more money, we're also paying more in taxes, which helps the government.
You're paying but again, you're paying more in taxes, but the government's spending more money.
Oh, this is impossible to understand.
Yeah, it's a spiral. That's what I'm saying. Is that this isn't like government says my budget is X and I need the taxpayers to give me X. This is the whole thing that's really hard to understand is for you get a paycheck and you spend it. That's your budget. For the government, the two things are separate. Spending money and bringing in money are two completely separate entities.
Gotcha.
They don't say, like you say, I made this much, my paycheck is this much, I have this much to spend. They spend the money first and they go, well,
let's see how much
we get,
yeah.
right? And then you're $1 trillion, $2 trillion, $3 trillion,
$30 trillion in debt.
Well, then you end up with $30 trillion in debt. So they don't look at it and say, well, how much money are we bringing in? They're just saying, this is how much we need to spend.
So how come no president has, why isn't anybody saying let's spend less? Because every election there's more and more problems.
So this goes back to my philosophy of, going back to my libertarian philosophy, I've got three people. One guy says, hey, you can have, all the tacos you want. Another dude says you can have all the pizza you want. And then the third party goes, you're a little overweight. You should be eating salad. Which one are you going to pick, right?
I like tacos the most.
But that's what I'm saying is that the guy who says, no, we got to cut back. We got to eat salad.
Oh, I see what you're saying.
Right?
Which one sells the best?
Which one is going to sell? I'm going to go to somebody's door. That's why I always joke about running for politics. I'm going to go out and knock somebody's door. Like, what are you going to do for me? I'm like, nothing. I'm not going to do anything for you. Are they going to vote for me? That's the whole point.
Well, okay, hold on a second, though. The health trend thing is starting to catch on, though. So more and more people might be thinking, I'm thinking smart now.
It does depend on the state. Like, say if you do it in California. Like, oh.
Yeah.
Right. So that's what I'm saying is that, but so, when you watch the debates, what are they talking about? They're talking about, well, we're going to create health care, student loans. Nobody's saying, hey, we're going to cut back.
Yeah.
There's no on either party.
That's hard to sell.
Right. That's a hard sell.
Because you're not giving anyone anything.
Right. Because what I'm saying is you look at it and go, well, what am I getting? Like, you're getting nothing.
So it's impossible. The other thing I always say is who cares how big the debt number is? Because what if that number can be 30 trillion? Why can't it double from here?
Right.
And what would change?
What would change is what changes if you go from $10,000 in credit card debt to $20,000? What changes? The amount of interest you pay every month, the service on your debt.
Oh.
So that's what I'm saying. Our service on our debt is in the billions of dollars a day.
Which means our bonds would just be.
You're just going to continue to basically, the more money that you have outstanding, the more money that you've borrowed, the more interest you're paying.
You mean the interest rate goes up?
No, the rate stays the same.
Oh, well, okay.
But the amount of money that you have to give people, like I said,
harder and
the
harder
difference
to pay
between
back.
having $10,000 credit card debt and $20,000 is the interest payment. Right? So you have $20,000 in debt, my interest payment on that debt, it's like when you pay the minimum payment on your credit card and they say it'll take 30 years to pay off. So that's the whole idea, is that the service on that debt is the interest, okay? So the more debt you have, the more the service is, the more you're paying people to borrow their money. So it becomes a spiral.
There has to be a solution, though.
What would that be? I mean, that's the whole thing. That's the whole idea of when people propose the Great Reset or the government declaring bankruptcy and stuff like that. Like, there's no getting out of $33 trillion in debt. So what are we going to do?
Yeah, it's too late.
You can't.
It's like 20 trillion too late, in my opinion. I mean, that's once you reach 130% of GDP, there's no getting out of that.
All we got to do is produce more.
Yeah.
Spend less, pay off more of our debt slowly.
Okay, so how do we produce more if I'm taking more money in taxes and people aren't producing more? That's the whole thing, is like, in order for me to produce more, what do I need? I need cheap money, right? I need cheap money to build a business. I need to convince people to stop buying stuff from China.
Right, let's do that.
Right, let's do that. So then that's where you get into tariffs and all this stuff, where it's like China produces cheap steel, and there's all these arguments about tariffs on this and tariffs on that, and it just gets...
This is stressful.
Right. Yeah, this is why I don't sleep at night.
All right, I'm not going into politics.
Okay, see, that's the whole thing, is that people just go, I don't want to deal with it. I mean, and honestly, I don't blame people, because it's
let Joe Biden deal with it. He's on top of things.
Well, let's let Joe Biden handle it.
Yeah, the 80, almost going on 150-year-old man.
He can't walk or talk, but I think he can handle this stuff.
Everybody running for office is 100 years old. Let's let them deal with it.
Okay, what's up next?
Okay, what else you got?
Target stocks. 9 store closures due to theft, causing up to a $500 million hit to their bottom line this year.
Yeah.
I can't believe that number is that big. How is that even possible?
Yeah.
No, what store did we talk about a couple months ago?
Walmart had that problem. And
Walgreens. I think it was Walgreens.
Yeah, they all did. Yeah. Walgreens, Dollar General, a bunch of them. But how can you steal how could they actually have $500 million worth of stuff stolen? That would be like every person would have to steal. That's a lot.
I'm going to have to look that one up while we're talking, because that is an interesting statistic. And I forget what they call that when a store loses.
They only have 2,000 stores or something like that.
Oh, Target?
Yeah. Mm-hmm. So what is that's like?
That is a lot of stuff.
What's?
I feel like Walgreens is like 100 million.
Well, this is 500,000. Are you saying five? The article I just pulled up said 500,000.
Maybe I put the wrong letter.
Hit to the bottom line.
Let me change it to a K.
So
instead of a T.
The Target CEO warned about a theft problem earlier this year when he said that the first quarter earnings, they were on pace to cost the company $500,000 in profit.
When was that? When did that come
out? That was a couple months. It was 3 days ago. So that was basically they had So they had a call the other day. So
500,000, not 500.
Maybe I messed up.
Yeah, that sounds a little more reasonable.
Okay, that's 500K is not that bad.
So that becomes, again, so this is the whole thing, is you'd say, well, I want to stay out of politics. Everything revolves around politics. So what stores are closing? The ones like in maybe Portland.
Yeah.
Walmart closed stores in Chicago a few months ago, and they blame the theft problem. And so that was the whole thing, is like, then you get into the politics of, like in California, you can walk into a store and fill a bag with $900 worth of stuff and walk out, and they can't do anything about it.
Yeah.
So like
because they raised the number from 300 to 900.
Right. So it's not So basically, and then so that becomes the whole issue. It's like you're trying to find the balance of, should somebody go to jail over stealing a pop or a loaf of bread? Yeah. No. But should they be able to walk in a store and steal $999 worth of stuff?
That's a lot.
And keep, you know what I mean? Like, so that becomes the balance. And again, that
I
becomes,
say be stricter.
Well, that becomes a political discussion.
It should be $50.
Yeah, but then you're going to put all of that. So you're going to hire more security then?
Then you're going to put more people in jail? I mean, again, that becomes the problem.
But it's better to have, even though it costs, it's better to have more people in jail than this happening.
Do you know how much it costs to put somebody in jail?
I know it's a lot.
It costs more than putting somebody through college to put somebody in jail.
No way.
Yes. Yes, it costs more per year to keep somebody in jail than it does to put them through college.
Legal fees and all of that, things like that.
Oh, my God.
So, again, it's like, okay, so everybody that steals, we're going to put them in jail. Okay, that's going to cost us more money, too. So that becomes another issue. And then, then there's the other argument about, you have certain places like, Portland or Chicago or something, and all the stores close. You have to call it the food deserts. And now there's no place to, now, the only place to go get food is like at the liquor store because everything else is closed. And again, it just becomes a giant political quagmire. How do you deal with that?
That's another thing I don't want to deal with.
I saw the Targets like in San Francisco. Literally, imagine like a Target store and everything was under like glass and plastic.
Yeah,
like
really?
Literally everything that you wanted. Like, I need this and that. Somebody to walk around and open the doors for you.
Yeah.
Like, how is that even sustainable? Like, you'd have to have an employee for everybody shopping, right? I mean, it's crazy.
I say hire more security then.
Well, but the security can't do anything. Like in California, there are videos. You can go watch these videos of somebody walking in, filling up a bag, and security can't do it. You would get in trouble for stopping somebody.
Why?
Because that's the law. I can't stop.
But it's not a federal law, right?
No, that's a state law. That's a state law or a local law.
But then why is it happening? It's not happening just in California, though. It's happening in.
No, it's happening all over the country. I mean, theft is a problem, but that goes back to the idea of, okay, I'm broke, and I maxed out my credit card. My baby needs formula, or just whatever. I want to go get some lipstick or something.
That's true.
So what am I going to do? I'm going to be like, or even the idea of my money isn't going as far, so I'm just going to go to the self checkout and throw a couple things, whatever.
Yeah.
I mean and most people have that mentality. Oh well, Walmart can afford it, Target can afford it, so I'm just going to steal a few things through the self checkout.
But then when they shut down,
then they shut down and go, well, that's not
And plus, these security guards, like, they're security guards, but they're not Superman.
Right.
Like, they're not going to be.
They're not going to go looking through your pants and stuff, right? They're not going to go through your pockets and whatever. So
okay, they make things more affordable for people.
So how do we do that? Okay. There you go. There you go. Good pause. So that's what I'm saying. It make things more affordable.
I don't know. I haven't figured out all the answers yet.
Right. So that becomes the question: is like, okay, well, things are getting more affordable. Because
invest in the stock market.
Invest in the stock market. Well, that's the whole thing. Is that so? What do Americans do instead of investing? There's a great story about Tupperware. So the Tupperware, I think, was made in. I want to say it's there. I forget if they make it in Europe or something like that. And the CEO would tell a story about how they're having trouble in America selling Tupperware. He said, but it does really well in Germany, whatever. He said, so we actually end up creating different lines of Tupperware. So like in America, Americans buy the cheapest thing. Mm-hmm. So I will sell cheap Tupperware in America as opposed to I'll sell better Tupperware in Germany where they're willing to invest in the good Tupperware. Mm-hmm. So Americans would rather buy Tupperware 5 times instead of buying the good Tupperware once, right?
That's me.
Because that's how we
I would definitely go to Dollar Tree and get it.
Go to Dollar Tree. But even if somebody said, hey, if you buy this thing 1 time, you won't have to buy this thing 5 times. It will save you money. Yeah. Like does the average American think to do stuff like that?
I would hope so.
Invest in good silverware, good knives, or invest in good whatever. I mean, that's the whole thing is that we just buy the cheapest thing. And that's what these companies have learned is just give Americans the cheapest thing.
But don't you think a lot of times, don't you experience that the more expensive things are similar quality to the cheaper things?
Well, and that becomes a problem, right? I mean, like my wife loves Dyson vacuums. And they're like hundreds of dollars, and I feel like I go through one of them like every year. It's like, am I buying the name? Am I buying it because it says Nike on it? I mean, again, Nikes cost like 30 cents to make in Cambodia or whatever it is. Yeah. You're not buying it for the quality. You're buying it because Michael Jordan's logo is on there, right? Or whatever. Right. So, I mean, that's the whole thing. You're right. That's a very valid point is that as Americans, we look at it and go, well, I'm just going to buy the cheapest one because the expensive one's going to wear it anyway.
But okay, I bought the expensive guitar last year. That is.
What's the difference between that one and your old one?
This one costs 5 times.
Well, the joke is they're made in the same factory, just put different stickers on it, right? I mean, that's the whole joke.
It's actually made by the same company.
Right.
Mm-hmm. So it's kind of the name, but I was expecting this like perfect guitar. Like this is what all like the legendary players play. I've had just the same number of problems with it this year, if not more problems than the last one.
Right, because it's marketing. So again,
that's how we brought up, with say you were doing region rides, they call you an Uber. Like name, brand recognition matters.
Yeah. So to me as a business,
that's a scam.
Why? Right. So I'm a business. I'm making guitars.
But that's why you'd buy cheap stuff then.
Well, so that becomes a question. Is like then that becomes the argument. It's like, well, why am I buying cheap? Why am I buying the good stuff if it's not going to last any longer?
Right.
So it becomes a cycle. If I'm the business, why would I spend the money to create different product lines? Create different machines, use different materials if you're just going to buy the cheapest thing anyway.
Or don't just buy something because it's expensive, thinking that it's better quality. You would actually have to know, is it better? You have to find out.
And that becomes another question. So like my grandfather, for instance, he always read this magazine called Consumer Reports.
Oh, yeah.
So my grandfather, literally, every time I'd mention a car or a dishwasher or something, I go, let's consult Consumer Reports.
Yeah.
And he'd go through all his magazines and he'd tell you, Consumer Reports bought every type of washing machine, and this is the one that lasted the longest.
Yeah.
But how many Americans are doing that? How many Americans are doing research about which washing machine or blender is going to last the longest before they go to Target and buy one? They're going to go buy one and say, well, George Foreman's on this one, or Jimmy Buffett's on this
Instead
blender.
of just thinking, what brand name do I recognize most?
Again, going back
that's
to
how
the
LG
Uber,
gets you with the wash machine. So
Yeah.
LG.
So that's the whole thing is like, you're looking for brand recognition. I could sell you a product that's not going to last as long, but you're going to probably buy my name anyway.
What doesn't make any sense is then why would all the successful guitar players buy that brand? Why would they?
Because they're not. Are they playing that guitar? Are they playing something? Okay. Well, that's what I'm saying. I don't know.
Why do they all play that brand then?
Okay.
Now maybe.
Or are they getting paid? Or are they getting sponsorships or whatever to play?
I don't think so.
Right. I don't know a lot about guitars, but
it might be like a familiarity thing. Kind of like say like
my hunch
you have an
is
iPhone, right?
Still, that wouldn't
my
happen,
hunch is
though.
they go to the back room of the factory and they go give me the good ones. I mean, that'd be my guess is that that celebrities and people like that are getting the good ones.
Maybe
they're getting their own special line.
No, it's true. Like say if you get like a jersey or something.
Yeah.
Like what they sell to the public is completely different than what basketball players, football players wear. Different quality, things like that.
Okay.
So it looks the same, but it's not. I mean, that, right.
So, and actually, every jersey would be fake if you think about it. Like, say if it's an official Nike jersey.
Yeah, unless literally somebody took it off and handed it to you, it's a fake jersey, right?
Man, what a shame. On to the next topic.
Okay.
Nike stock. I bought this one.
Okay.
And then
you did?
Yeah, and then someone on TikTok was like, "Why did you?" They're like, "Don't buy this stock before you see what the earnings are like."
Yeah.
And then earnings came out, and then the stock went up 10%. And then I was like, "That's why I didn't wait till earnings came out."
Well, and there's that whole thing we always call it buy the rumor, sell the news. So when earnings came out, would have been a good time to sell, honestly, in my opinion.
Well,
Not
it was only. I was like, it wasn't anything. I was up a couple. I was like break even or something.
Yeah.
So I wasn't.
Well, but I'm saying there's a lot of people that like to play earnings, and then they end up even the idea of options. You don't buy options a couple days before earnings. You have to buy the option. You buy an option weeks in advance for an expiration after earnings, and then you hope hope earnings go in your favor. So, but yeah, I mean, if it was me, I would say in your play was accurate, but I would have sold it right after earnings if it did well. That would have been my opinion. If you're holding it, that's one thing. But even the idea of like, let's say something has great earnings and their stock goes up 10 or 20%, what's going to happen is it's going to get oversold. So if you sell it, it's going to get oversold. It's going to drop, and you're going to get right back in at a cheaper price.
Right. But I'm thinking in terms of having it hit 130.
Okay.
I bought it at 100. It went to 90. Now it's at 100. So I'm not going to sell it at 100 because I think it's going to go to 130.
Well, yeah.
Could they have some special news that we don't know about that you know?
No, it's Nike. It's Nike. I mean, I know how to. I have my strategies for valuing stuff, but it's Nike. It's not like a risky.
Well, that's the other thing though, is that as much as we look at doing due diligence, crazy stuff happens. Like you talked about Target.
Mm-hmm.
Crazy.
That stock has not stopped falling either.
Right, because of some. I mean, and I don't know. I don't know what was in the store or what people were offended by, or like the Bud Light thing, where it's like you could look at do due diligence all you want, but then something crazy happens with your Bud Light or your Target.
And that stuff has happened in Nike before, I think.
Right. No, well, that happened with
the China stuff.
Well, no, even like the Colin Kaepernick.
The Colin Kaepernick
was it Colin
thing?
Kaepernick was part of that?
Yeah.
I mean,
that's
stuff like that, where it's like,
ago.
that becomes the issue. Is like you have to keep. You can do your due diligence, but you also have to keep an eye on the news. Like as soon as you start hearing crazy news about Bud Light, it's like,
but you can't predict that though.
You can't. But if you're paying attention, you could say, okay, that's what I saw about that saying about go woke, go broke, and stuff like that. Where it's like if you own stock in something like Target, and all of a sudden you're reading about it on social media about what they did, you're like, oh, people are gonna be mad at Target. I should jump out, right? Bud Light lost billions of dollars.
But a lot of times those little news pieces don't last.
You never know. But
they last for like a good 4 months.
They last long enough to affect the stock. Bud Light's lost billions of dollars. And you don't know. That's what I'm saying. You don't know. It could be one little blip and it's over.
Disney, it's lasted a while.
Right.
Disney has been an $80, $90 stock for too long now. Just because all going back to their argument with DeSantis.
Well, that situation's still ongoing though.
So that becomes the question though, is that so now you hit on a good point. Disney is fundamentally undervalued.
Yeah.
But when are you going to strike? When as soon as they're shaking hands with DeSantis, like, oh, buy Disney. Like,
well, I've been buying it.
Well, I mean, and that's what I'm saying. I agree with you. It's an undervalued stock, but what's going to be the catalyst? Is it going to be something that in 6 months things are going to get better? Are people going to, just forget about them and move on? I don't know. I mean, that's the whole thing is you're buying an undervalued stock. You're right. It's a matter of how long you have to sit on it.
Oh, did you hear about Disney Plus? They're doing the password.
I did see that. I did see that.
They're also investing a whole bunch of money in there. I've been hearing that their parks are kind of looking run down to a lot of people, so they're spending billions of dollars on the parks and stuff like that. So
I'll be there next week.
What's the other thing? Another example of this is Planet Fitness, and this is a newer one because Planet Fitness it dropped something big, 30%, 40%, something like that. So I'm keeping an eye on it because I'm kind of thinking like, okay, this might be a good opportunity. And the only reason the stock went down is because the CEO left out of nowhere, or they kicked him out or something like that with the CEO.
Well, and this becomes a fundamental question. Like I even literally last night was driving past a Planet Fitness and there's a full parking lot.
Yeah.
So this is like what my grandmother taught me. It's like, hey, pay attention to things like that, right? I noticed Planet Fitness, and there's a new Planet Fitness like every week around here.
Yeah. They're all busy.
And,
like you're right.
Like,
I've never seen a Planet Fitness not.
So literally that play popped in my head just looking at that store the other day.
And the other thing that's good with them is they're like the only chain that charges $10 a month.
Yeah.
They're the cheapest, yeah.
Yeah, they're the cheapest. So they have a good reputation like that. The only thing is, as a gym person myself, I don't like that gym. That's why it's like
my wife took me there one time, and the whole thing with the lunk alarms and all that stuff. I'm like, I'm out. I'm not.
Yeah.
I can't bring water here. Like you're gonna, I can't bring a jug of water with me. But but again, it's like the parking lot's full.
But people still like it. Yeah.
Yeah. So I would say you're right. I mean, if something happens where there's news about a CEO and it's fundamentally undervalued, and you look and it just like I said, you drive past the store. If a Sears store is empty, you're like, oh, it's not good. But you drive, or even Bed Bath. Like Bed Bath's been in the news a lot. Bed Bath, the parking lot was always empty. That's just like my gauge about whether to invest in a company like that.
Now,
Planet Fitness always packed.
Here's the other thing I noticed too. When a stock, when those events happen, where a news comes out and the stock drops 30%, whatever, I used to think buy it as soon as that big drop happens. But that's not how it works.
Mm-hmm.
It for days, if not weeks after that, it will continue.
Imagine
if
people had done that on Bud Light. They would have lost 20%. You know what I mean? Like if they would have waited, like they bought Bud Light 2 days into the crash or whatever, and they would have lost 24%. Yeah. So I mean, that's the whole thing. That's where reading, looking at volume, learning how to read charts comes in handy, because you can start to look at, well, there's a certain point where not everybody's going to sell that stock. Not everybody's going to sell their target because, again, most of that's institutional investing. Most of that's sitting in Citadel and BlackRock and whoever. So they're not going to just like, oh, there's bad news, we're going to sell it. So most of that stock is going to be held. Mm-hmm. So the retail investors are the ones that are going to panic. They're going to see Bud Light. They're going to sell. At a certain point, that's going to run out of gas, just like buying. At a certain point, there's not enough people to buy. And that's where you have to look at overweight, underweight, stuff like that. When you learn to read those charts, look at RSI and stuff like that. You get to look at it and go, you can look at RSI. You can look at, you stack enough charts on top of each other and you learn to read them. You're like, okay, I can see this. I can see the end of, I can look at the RSI. I can see that we're at the end of the sell. You know what I mean? They're starting. But again, when you're selling options, you don't wait for the RSI to turn around. You look at it and go, okay,
what's RSI?
So RSI is the relative strength index. It basically looks at the volume. So you can use RSI as a chart to see if something's overbought or oversold. So like I'm watching RSI. So if everybody's selling like Bud Light, I can look at it and I can watch the RSI, and everybody's selling. And then like if you're doing options, you look at it and say, okay, we're about at the end of the sell-off. I want to buy my options now before it turns. So like if I'm, like you're telling earlier about options, if I try to buy options on something as it's going up, all I'm doing is the volatility is priced in there.
Yeah.
Right. So that's the whole thing, is that you always have to be the first guy. You have to be like one of the first guys in. They always say, don't try to ride the entire wave, but ride most of it. You know what I mean?
Gotcha.
And that's the whole thing.
But okay, so does that mean then, that would mean then that, okay, that's confusing.
Okay.
If you said be one of the first guys in, that would mean you don't wait for the wave to turn up.
Right.
That means you get it when it drops early.
No. No, I'm saying you're watching the wave drop. The wave will, whether you're buying or selling, whether something is being overbought, there's good news, they're buying. You see, when you watch RSI charts, you will see, okay, the selling is coming to an end. We're starting to turn okay, I'm at, so you're kind of looking at it going, okay, are we running out of gas? You look at those RSIs, you look at those candlesticks, you look at it and go, okay, the selling is trailing off. The selling, okay, here's our in, right?
Before it
turns, right? And some people do the opposite. I mean, again, that's not financial advice. Some people wait, say, okay, it's turned. I got 3 green candlesticks. I'm buying. Again, it's just sort of it's how people's approach to the stock. Some people that scalp, they look at it and go, okay, this stock is doing well. So I've got it's in the green. I got 3 green candlesticks. I'm going to buy, and then I'm just going to watch it. And as soon as the RSI flips, I'm going to sell it. And they're doing scalping. They're just day trading.
But doesn't that go against Warren Buffett's advice?
Absolutely.
That's right. Why wouldn't it make sense to follow his advice?
I would think so, but right. I mean, again, but Warren Buffett, I mean, that's the whole thing is like going back to the idea of Warren Buffett making consistent profits, dollar cost averaging, there are people that are going to take that advice, and there are people that are just going to sit here and day trade and scalp and, buy crazy options and hope to make 100% in a day.
Yeah.
So you say you do options, correct?
I do options, yeah.
So what's some other advice you would have somebody who wants to start getting into it?
Everybody always says paper trade. I mean, this cool thing about all these platforms is you can paper trade, you can understand. So that's the whole thing is that in stocks, it's easy. I buy it at 90 and I hope it goes to 100 and I sell it. But you have to have a plan. Okay. I mean, that's the whole thing is that a lot of people, I think the number one thing I would say is have a plan. And then the other thing that happens is you get emotional about things. So you look at it and go, I'm losing money. And you sell it. And then what happens? It flips on you. So, I mean, that's the whole thing is that after a certain point, like I said, I've had big wins, I've had big losses, and I look at it like, well, we lost this one. Oh, well, I mean, there's like when I'm doing SPY options, and bad news comes out and the SPY goes down 1-2%, like, oh, well, called that one wrong. And then it's like, okay, well, not, I mean, that's the whole thing is like, you have to have plans, you have to have a plan to trade, and you have to try to take your emotions out of it, which is hard. And that's probably my best advice is like do it on paper and understand I bought my option at this, I went to this, did I make money? How long should I hold it? What's my indicators? I mean, I'd say if anything, just paper trade. And there's so much advice out there. And that's the whole thing is like, there's almost too much advice. Like you go on YouTube or whatever. I mean, you go on Reddit and everybody has a plan, right? I mean, that's the whole thing is that like, you can take other people's plans. Every day I'm hearing about a new plan. Do 0 DTE, do this, do that. Every day I hear about a plan. I'm like, okay, well, if it sounds promising, you paper trade it and see if it works. Mm-hmm. Maybe it works for you. I mean, even schedules. Like there are people that, like maybe they can't watch the market at 8:30 every morning and see what it's going to do. There are some people that maybe they, they can't trade on even, some people have a job where they can't play with their phone, have their phone in their hand. You know what I mean? Like that's where you have to look at it and go, how does my lifestyle fit into that? Am I able to be in, my lifestyle, I can be at my phone, be at my computer at 8:30 or at, whatever, and just watch and see what's happening. I can get up early, watch the news, see what's going on. Some people can't do that. So that's the whole thing. It's mainly just come up with a plan that works for you, but also there's that whole idea about risk management and, figuring out this is how much I have to invest. I have X number of dollars to invest. I'm not going to put it all into options. I'm not going to put it all into my Nike play, looking for earnings, diversifying. I mean, all those like Warren Buffett ideas are solid, but it's developing a plan that works for you.
Mm-hmm. So this probably goes with risk management that you personally have, but how do you deal with those type of losses in the stock market, like big losses and things like that?
You throw things, you get angry. I mean, but again, you look at it and go, even losing money is crazy, but it's even just like, when you scalp a trade, like you make 10% and then you watch that thing go and go and go, and I'm sitting there calculating, man, I could have made 100%. I could make 200% on that trade. That's just as frustrating, but it's like one of those things where it's like, what can we do? And that's also the idea of sizing in and out. So like say you buy 10 options and you go, okay, maybe 10%, everybody just goes, well, sell. Like, well, maybe I sell 8 and I see what happens. And then maybe if it goes up 50%, I'd sell the 9th. And maybe I have.
Or that's what I learned, that you don't sell everything at one time. You sell in pieces.
Well, and there's numbers that go into that. It's sort of like, okay, imagine I put $1,000 in and I make, I buy 10 options, I put $1,000 in, and I make my 10% or whatever I want to make. And then let's say I make, however it works out, that I sell 8 options. I make enough money so that I sell 8 options and get my $1,000 back. So I've got $1,000 that I put in, plus I've still got 2 options. At that point, it's just free money, right? I could sit there and let it run to 50% or 100%. So that's the whole idea is like, and that's one strategy that I hear a lot about is, buy an option. And like you said, scale in, scale out, so that at a certain point I made my money back, and then maybe this thing runs, and I just, maybe I make more money on that one option than I did on the other 8.
Yeah.
So, and again, that's the thing is, like I was saying earlier, is that far too many people, they get an inheritance, they get money from whatever, and then they immediately throw it in the market, and they just start playing with it, and then they lose it all. And then that's it. That's kind of the thing about the market. You get like one shot at it. You know what I mean? Like that's the whole thing is if you get an inheritance and you put it all in the market and lose it, then that's it, right? You got to wait till you make more money. But if you diversify and you kind of say, okay, I'm going to take 10% of this and learn how to play options. If you lose it, you lose it, right? I mean, that's the whole thing is far too many people, I think, just go crazy like playing roulette, like throw it on black, throw it on red and see what happens, So that's probably my best advice on that.
We got anything else on the list?
I think
Wait, what is that?
The only thing I put on there is the recent IPOs, Instacart and ARM Holdings. But I'm not buying any IPOs. So
IPOs are tricky. So I mean, I always tell the story about Facebook. Facebook IPO'd at $40, and I remember it's like one of those things where I always tell people one of the worst things that I do is I don't take my own advice sometimes. I remember telling people Facebook IPO'd at 40, it dropped down to like $25, $26, and I'm like you can't go wrong here. Like at Facebook at $26, you can't go wrong. And I bet big on it, and then something happened where it just wasn't doing anything. But again, had I just been patient, I would have made 10x on that.
Yeah, right.
You know what I mean? So that's same with like Elon and Tesla. And I'm like, this is exciting stuff. Like I was early on with the Elon, and I was like, I think again, Tesla doesn't need what? Go ahead. You guys not fans of Tesla?
No, he actually has a man crush.
He's not a fan of Tesla.
That's not true.
Oh.
You just take it to.
But again, look at Tesla compared to Ford. I mean, look at the Ford stock. It does nothing. I mean, it has nothing to do at that point. It has nothing to do with the product. It's just Elon. You know what I mean? Elon can tweet and make Tesla go up 10%. But I mean, I was early in on Tesla, and I'm like, I don't know what this guy's going to do, but I think he's got big things in mind. And same idea. Like I could have been one of those Tesla millionaires that you're always hearing about. But it's like the whole thing is like, man, I saw it. So that would be the other advice I have is like, once you know what you're doing, trust your gut. So like I said, Facebook, $26. Like I should have just held that. I should have bought as much as I could. How long did
you hold it for?
6 months or something. It was like one of those things where it IPO'd, it went down to 26. I bought it. It didn't do a whole lot. And then, I sold it. And then like a year later, it went up to like 200. You know what I mean?
Yeah.
I mean, that's the whole thing. It's like one of those jokes, like whenever you sell it, it's when it goes up kind of.
Yeah.
So that's all, it's all patience. You know what I mean? It's like I had, my gut said this stock is a worthwhile buy. It's going to do, it's going to do big things. You just got to wait.
But Facebook, like at the time, like people, like that wasn't like, that was probably a big guess though, because people didn't know exactly how they were going to make money.
Well, that's what I'm saying. Yeah, it was a guess. So that's what I'm saying is that, again, getting in early, it was a $26 bet. It could have very well gone to $5 or $10, but I'm like, it's a $26 bet that it's going to go up to $200, which is what it did. You know what I mean? So that's the whole thing is like you buy it early enough because you're not going to. The market is always priced the way it's supposed to be priced. So if somebody's doing big numbers, it's too late to buy the stock, right? Because I mean, it's already priced in. Or even I always use the example of like Chipotle. Chipotle had an E. coli scare. So Chipotle doing really well, took a big hit for E. coli, and I'm like, I should just and I was telling people, I said Chipotle is not going anywhere, right? Chipotle will recover from this. Now's your time. I mean, they lost like 20-30%. It's like this is the time to get in.
Yeah.
I didn't take my own advice, and then it went up 5x or something like that. So that's how it is. I mean, that's the whole thing about the market is like, if your gut tells you to do something, it's like, run with it. And it's, again, if you think you're making, that's the problem though, is so many people make decisions based on their feelings towards Elon or their political leanings or something like that, where it's like, if you can separate yourself from the politics or even the idea of, well, I don't go to Planet Fitness, I'm not going to buy it. It's like, well, everybody else in the neighborhood is, you know what I mean? Like that's the whole thing is like, you have to separate yourself out from saying, well, I don't like Elon, so I'm not going to buy Twitter.
But see, that's what I did with Tattooed Chef, a frozen food company, a plant-based frozen food company last year. And I was like, I would never be a plant-based person.
Yeah.
I put a bunch of money in there,
Yeah.
and it went bankrupt.
Well, I mean, that's the same thing, though. It's like it either could have went bankrupt or Amazon could have bought it, and it could have doubled, right?
And they were in Costco, they were in Target, they were in Walmart. All these big retailers were getting them. So I was like, okay, this is a perfect opportunity. But nope, they screwed it up.
Well, and that's the whole thing, is that you don't know what's going on behind the scenes. Like, even with the whole AMC thing, is like everybody's like, everybody loved Adam Aaron, the whole thing, and then he kind of, did what he did to them, and all the apes kind of turned their backs on him. But that's the whole thing, is you never know what's going on behind the scenes at a company. As much as you could read all the news in the world, and the CEO, like you said, doesn't know what they're doing. They don't know how to scale. Mm-hmm. They're doing it for themselves, whatever. So it's tough.
Okay, let's do this. Our last segment will be everyone picks one stock that they're bullish on for the next 12 months. And you cannot pick AMD.
Chuck, go first.
No, go ahead. I got to think about that for a second.
I already know mine.
Okay, go, because I got to think about it too.
I got like 20 I could tell you right now, but if I had to pick one, I would say Ulta Beauty.
Really?
Yeah.
Okay. I mean, I'm more of a sector guy. So so one of the things that's really interesting is this whole AI thing and how it's affected NVIDIA and stuff like that. Mm-hmm. Like, I've always been, again, same idea, NVIDIA. If I would have just held NVIDIA, man, like any of these stocks, I'm like, early on with NVIDIA, I'm like, man, I should, I remember when NVIDIA was like $20 or something. Mm-hmm. It's like, damn. But same idea. Is like, I think that the AI thing could go either it's going to become a thing, and the people that are producing the chips and producing, basically the people that are early in on that are going to make money. So I'm on the fence about AI, but I think at the very least, like NVIDIA, people like that. But NVIDIA is overbought right now, I'd say. One of my other things that I've been joking a lot about is the idea of, there are ways to invest based on what government's doing. Like there are funds where you can basically see what Nancy Pelosi and those people are doing. Right. So like even watching how Nancy buys and sells NVIDIA and Tesla and stuff like that. So that to me, like that's kind of going to be my next thing, is going to be to look at how AI can help us trade. I mean, honestly. Yeah. So I think that's kind of my new thing, is I'm going to look how what AI can do besides just being like something you can ask it questions. Mm-hmm. Like it's kind of like when people first started hearing about Bitcoin, everybody started putting blockchain and stuff. We've got blockchain logistics, stuff like that. So it was like one of those things where it was a buzzword and people were making money off of it.
But it was temporary.
It was, well, I don't know if it was temporary, but it
died
cooled off.
Yeah.
But same idea is that I think this AI, something is going to come of it. I just don't know what yet.
Yeah.
I don't know if AI, if we're just going to replace everybody that works like at McDonald's, or if we're going to replace every truck driver with AI. I don't know, but somebody's going to make money off this.
Yeah.
So that would be my sector is tech and AI at this point.
Josh?
Coca-Cola.
What? No.
Coca-Cola.
Choose again.
No. I'm going Coca-Cola.
Okay.
I'm going Coca-Cola.
Fine. Get your 1% returns per year.
That's fine with me.
But what is like Coca-Cola, AT&T, stuff like that? Get you.
No, AT&T, you're going to lose money. That stock only goes down.
Well, but they're dividends, high dividends. Like but
you lose more than the dividend.
Well, that was the way my grandparents used it. It was like, would you buy high dividend stocks, Pfizer, and AT&T, and whatever?
Because I did Verizon and Walgreens for almost 2 years, and even though they pay high dividends, you lose more money in the stock price than you make. Yeah.
Well, I mean, again, it's a timing thing too. But you're right. If you're in the commerce sector and commerce sector is not doing well, brick and mortar.
Yeah, but those stocks go down like for the last 8 years they go down further and further. So
I think a lot of those are they're just basically they're running between how would you put it, like basically there are certain the bread and butter stocks that they kind of run. They just do whatever the market's doing. If the market's doing well, they do okay. If the market's doing bad, they don't do so good. But yeah, it's like if you get the timing on that right, and there are people that they just buy dividend stuff. It's like, okay, if you get your timing right, making dividends, good for you. Like you said, you're losing money on one side and making dividends on the other, and you think you're making money. I don't know, but
and some people are somehow happy with that though.
Yeah, some people, I mean, long-term investors, you're just going to buy a whole bunch of whatever and just let it go and not look at it. If you could do that, cool. I don't have that kind of patience, Okay.
So would you consider yourself more of a short-term investor versus a long-term investor?
Yeah, absolutely. Yeah, I mean, it's like. I like the action. You know what I mean? It's like going to the casino. So it's like going to the casino, but I'm not gonna leave the casino empty-handed. Not gonna put my whole paycheck in a slot machine. So I wouldn't do the same thing in the market, But I mean, when you get to a certain point where it's like, you can start to see stuff. Like I was talking about Tesla. There was a point I could see, it's like the Matrix. I could see Tesla, what it was going to do. I'm like, okay, so we just day trade. We'd just get in and out of Tesla. And I was making money just in and out of Tesla because I just like knew what it was going to do. It's like a weird thing that just like you watch stuff long enough, you just like, about rallies, about the Santa Claus rally, seasonality, all these things. It just sort of like hits you. You're like, okay, we're getting towards the end of the year, Santa Claus rally coming up, stuff like that. You just kind of know, your gut just kind of says, yeah, it's okay. We're going to have right now, I'd say we're going to have a short rally here going into the end of the year would be my hunch.
Yeah, hopefully.
So, I mean, I would hope so. But again, there's
I just wanted to keep going up. I don't want any.
Well, who doesn't? What's your strategy? I hope it keeps going up. Okay. Well, that's what everybody hopes.
It kind of does.
So that's the whole thing is your strategy. That's the whole thing is everybody's strategy is just I hope it goes up, but then you don't have a plan for when it goes down. Do you know what I mean? Like that's what people always say is like good traders can make money when the market's going up, down, and sideways.
Yeah, but it's the stock. The market has never not recovered. It's always recovered.
Right. But so look at it this way though. Like imagine somebody was like retiring. Like imagine somebody had a whole bunch of money in the market and they retired like right when the 2008 crash happened.
Yeah.
You know what I mean?
That would be bad.
Like so all of a sudden I go to retire and then like the next day the market crashes. It's like,
well, if you're within 2 or 3 years of retiring, then that's a different story.
Right.
You should be safer. But if you're not, then
well, that's what I'm saying. Is I mean, you have to. Your time horizon is also important. When you're young, you can put money in all kinds of crazy stuff. You can start saving money. You can put it in making gambles and stuff like that. And if it doesn't pay off, you still have more time to put the money in. But yeah, when you're older, that becomes a thing. Like as you get older, you're hoping that you time it out so the market doesn't crash as you're retiring.
Yeah.
Otherwise, you're not getting that Social Security. So.
Yeah.
Anything else?
Okay. I think I'm good.
It's a lot of fun. I hope you guys can sleep well at night. I mean,
oh god,
it's tough. Like I said, the more you learn about this stuff, you're like, none of this. There's a certain point like none of this makes sense, and at a certain point, it just starts to make sense. Yeah. Like, man,
it stresses me out.
Yeah, it is stressful. It absolutely is. Mm-hmm. So I understand why a lot of people just avoid. I can understand why a lot of people avoid sort of the politics and the bigger picture, but then also, like I said, politics affects everything. Whether you're starting a business, you start a business at the wrong time, you invest at the wrong time, politics affects everything. Mm-hmm. That's why, I love it and hate it, Mm-hmm. So.
All right, well, Chuck, thank you for being the guest.
It was a lot of fun.
Round of applause.
Yeah, thank you.
Friend of the show, friend of the station.
Yeah, we'll do it again sometime. At some point, you guys will just have like a whole list of questions. Like, Chuck, why is this? I don't understand this. And we'll come back and revisit all that.
Next time we got to bring Tony, too.
Yeah.
I know, yeah, we should.
Oh, that'd be a trip. Imagine trying to explain him. I've tried for many years to explain this stuff to him. That's fun.
All right. Nico, got anything else to add before we go?
We are good to go.
All right. Well, yeah, I think we'll be airing this on Tuesday. So what's the 3rd, October 3rd?
Something like that, yeah.
All right. Well, thank you all for tuning in, listening to Stock Talk with Josh and
Chuck and Nico. Yeah.
There you go.
There you go.
The JCN podcast.
Yeah, that's a good name.
Like that?
That's cool.
I think we should change it to that now.
Okay.
All right, but this concludes episode 53 of Stock Talk with Josh and Nico. Thank you all for tuning in, listening, and bye-bye. Oh, and also to greener days ahead.